Thank you again so much for being here. We're really excited to see so many faces in the room. And thank you to Ryan for moderating our last panel. You'll find that there's a lot of similarities with this panel, but from a different point of view. So on the stage, we have three extremely experienced GPs here to give you their perspective.
That's code for old.
I didn't want to age them. I didn't say old. But extremely experienced GPs that are going to give you their perspective on what success looks like for junior VCs. So to start, I would love if you guys could just introduce yourselves and be sure to mention how long you've been in the business.
So Phil Bronner, co-founder and managing partner of Ardent Venture Partners. So when I started in the business as an associate, some of you were not alive. So I started in 1999. I was with a fund based in DC. We had about $650 million under management. I invested about $100 million of that, led 16 investments, anything from enterprise software through internet infrastructure, ended in SaaS. Also co-founded a venture-backed company that I ran in addition to managing my portfolio. Then moved the chairman of that back in 2017 and started to invest on my own account. Did about 13 angel investments over the course of 2 to 3 years, then co-founded Ardent.
Hey, good morning, everybody. My name is David Hall. I'm the managing partner of the Rise of the Rest Fund. We're part of the Revolution family of funds. It is so awesome to be here in this crowd, in this room, under this label. It's amazing to see how far we've come. You heard from my colleague Carl Leacock in the previous panel, but Rise of the Rest, part of the Revolution family of funds. We invest in places that aren't Silicon Valley, that aren't New York, that aren't Boston, really realizing that there's a lot of great entrepreneurs building great tech companies today in the Rest. I started there when it was still basically Steve Case's family office in 2006. I was the junior guy on the totem pole and have worked and clawed and fought my way up to now running our seed fund, and it is the best job I've ever had. It's exciting to deploy capital into founders that frankly don't have a lot of other alternatives. If you're trying to raise money even in a city as large as Phoenix or Denver, you still are clawing for early stage capital. So our work is still not done. Our mission is ever strong and has been supported by a lot of the recent tailwinds by the pandemic pushing people all out of the two-bedroom apartment in Manhattan doesn't look so good when you can't go outside. And so the idea that people are now starting to move back home, you heard a lot of people in the previous panel, this was their home. And the idea that people are coming back home is starting to really grow and accelerate. So great to be here and look forward to the conversation.
Thank you. Hello, everyone. My name is Ollen Douglas. I'm currently the CEO of Hanover Street Advisors, a consulting company helping venture-backed companies. Prior to that, I was the founding managing partner of Motley Ventures, $250 million venture capital fund, investing inside and outside the norms to find great founders and great investment opportunities. My start in venture capital was 22 years ago when I joined a venture-backed company, the Motley Fool. I was a corporate CFO for about 14 years, and then had the opportunity to create and launch the fund that became Motley Fool Ventures. Super excited to be co-investors with David, to be an LP in Phil's fund, and we're getting there.
That's right. Thank you so much for sharing that. I'm Mikkey Clarke. I'm head of platform at Ardent Venture Partners. I have the pleasure of working with Phil Bronner, and I joined about 1.5 years ago after being a founder in Austin. I started my career at Vista Equity Partners on the fundraising team. So I usually learn best through stories, and I'm sure you guys have a lot of them. And so I would love if you guys could share a pivotal moment in your early career when you think that your trajectory changed as a venture capitalist. We can start down at the end with Ollen.
Right. I think for me, the pivotal moment for me in venture capital had a little bit of a different trajectory, which I think is very common among black folks that are getting into this business. And I think it's an advantage, also a challenge. You don't always fit the prototypical template that people have on paper, but you have those unique experiences in that grind that really makes it viable. And for me, it was that pivotal moment when was very aware of what I didn't know about venture capital. But as I got into conversations with people, being able to find that place in my experiences where I could kind of stand out and speak with confidence in those areas that are related to venture capital. And so that pivotal moment for me was learning how to really understand what my strengths were and have those conversations with people as, like, seriously, as you're trying to feel legit in the business, you know, we're tailor those conversations around your expertise. Like, don't come to me to talk accounting, right? Just don't, right? Just talk about anything else, right? And it's going to be impressive, you know, and it's going to open things up. Right? You're going to feel more comfortable. I'm going to feel that confidence, that comfort, and that's, I think, will help you to just kind of move forward. So kind of expand from your area of strength as opposed to trying to be all things to everyone.
Yeah, mine was easy. First, I think imposter syndrome is insidious. It affects everybody. I mean, it affects white men, it affects white women, it affects, and I think we often internalize it a lot more than we need to. And so, like, I will start with the piece of advice. When you walk into the rooms, when you're sitting at the table, you belong at that table. Your voice is needed around that table, be it a team meeting or a pitch. Your voice is valued at that table, and your lived experience provides unique insight to provide into that table. My story quickly, this was sort of my full circle. Because I remember, you know, when I first started in this business, I would sit at the table and the conversation would be fast flowing, and in my head I'm rehearsing, well, I wonder if the revenue changes over time. Like I'm like literally rehearsing my question because I don't want to sound dumb. And by the time I'm ready to ask it, you know, they've left revenue. They're halfway down the P&L now. They're talking about operating expenses. So my opportunity to ask my question, because I was so in my head, had passed. So fast forward to, it was a board meeting. I was in the Hearst Tower in New York City at a board meeting for one of our portfolio companies. And I just remember like the freedom of saying, I don't give a shit, I have a question, and they're gonna answer my question, the company will answer my question. And that feeling of fortitude and, you know, hero-stanced power to ask my question for me was like that full circle moment of, you know, being the junior investor in a similar conference room in Midtown Manhattan, rehearsing my question over and over again, and now saying, I know my stuff, nobody can take it from me, and they're gonna answer my question. It might be stupid, but they're gonna answer it anyway. And turns out everybody was like, yeah, I had the same question, I had the same question, I had the same question. Even further sort of edifying my advice. Like, own the room, you belong at the table. So that's my quick story.
Yeah, I'd say for me, a pivotal moment for me in VC actually happened before I started. So I was at McKinsey at the time, and I was working on this project, and I was working on it for, you know, a very successful private equity guy at the time. And this was like 1998, right? So private equity wasn't big at that point. And I remember like my job, literally, so it was me, I was the senior associate, there was a VP, there was an analyst on this project, right? And basically every day we got on the phone and we made a bunch of calls. And at the end of the day, we would sort of update the buyout guy on it. He would give us feedback. We'd do it the next day. We did it the next day. We did it the next day. Did it the next day. And I'm like, why is this guy paying basically $300,000, $400,000 a month for me to be making phone calls all day? And we just kept doing it, like day after day, week after week, month after month. And I'd say by like the third or fourth week, I started to see these patterns that I didn't see when I started. And I'd say a month or two in, I started to see other nuances. And by the end of the project, we had a view on that market that was distinct from anybody else out there. And there were a couple of takeaways for me that I think are relevant for young VCs. The first thing is that the venture capital is almost intuitive. And what I mean by that is you come into the business and you sort of think you understand it. And often in that, you try to add value based on that. And what I would say the nuance is that you may not fully understand it, and you may not fully understand why somebody's asking you to do something, but just do it, because you'll learn something from it, right? And so like going in, really taking direction and just over-delivering on that direction early is super, super helpful, because a lot of the money is made in the nuances. When you look at the business, I'd say a few things. One, most of the associates, so all of us have been in this business a long time. When you look at the folks who started over the decades that I was in it, many don't make it to partner, right? Those that make it, most don't make money, right? So even if you look at funds that make money, most partners in those firms do not, right? And so it's a very small number of people in this business who actually have made money. And what I would say is, early in your career, try to find who those people are and listen to them and execute based on what they say. And I learned that from that project, and I learned that from another thing that happened at my fund early. There were things they were asking me to do that I didn't understand, but then the further you get into it, you do.
That makes a lot of sense, and thank you for sharing. I can definitely relate to David talking about imposter syndrome. I'm rehearsing my questions in my head as we speak. But I'm also glad that I found my partner who's made money to listen to. So that's good. I can't wait for my pivotal moment in VC. This next question is for David to start. Knowing that VC is such a competitive industry, a lot of young people work so hard to get into the role, but once they're in the role, it's kind of like, what next? And so can you speak to how to build a personal brand within a firm, outside of the firm, to really distinguish yourself against others, or not even against, but within other young VCs?
Yeah, sure. So my belief on this is maybe a little controversial, but I think the first thing you should do at a firm, once you're internal, is find the thing that nobody else wants to do and do it. Right? A lot of times that's like LP reporting. A lot of times that is some of the granular stuff, the grimy part of venture that isn't, tell me your life story, founder, and that's the fun part. That's the sales part of the job. But the ops part of the job is the harder part. And if you step on that and outperform, that's a win. That's a victory in your column, and then that gives more opportunities for you to step up and win and other things. I think on the outside, look, you guys are super fortunate to come up in the age of social media where you can really build your brand. And I think for me, the biggest belief is specialize, at least in your interest, right? You might be at a generalist firm and you might be focused on something, but find a very narrow, investable niche that you can outperform and become an expert on. I always think about it like when you look at cable news and somebody comes up to speak, and at the bottom of the chyron they have, David Hall, expert in whatever. What is that thing you're going to be the expert in? And hopefully it relates to what your firm invests in. Otherwise, you need to make some other changes. But become an expert and then learn about it and talk about it. And I mean, you've got the best blogging platform where literally you get credit for like amening somebody else's comment and adding 2 sentences of your own. Then you become like, oh yeah, Phil just quoted this. He just tweeted this great tweet. I'm like, yeah, I really agree with Phil. He's super smart. Retweet. And I am now, emphasizing and associating my expertise with somebody else's. So really draft off of what others can do on LinkedIn and Twitter, particularly for this business. And have an idea, have a point of view, have a perspective. Nobody ever, if you say the top 5 things that are gonna happen in AI over the next 12 months, and you blog about that, 1 through 4 might be wrong, but if 5 is right, you could say, I call the play. I call the play. Nobody ever goes back and says, well, you didn't call 1 through 4. You say, yeah, no, I call the one that really matters. So really focus on building your brand externally and internally, sort of being on that mushroom deck, doing the stuff that nobody else wants to do really does help establish yourself in a firm, in my opinion.
No, that makes a lot of sense. I need to get on Twitter soon. This question is for Phil. So a lot of junior VCs think they know what they need to focus on. They get into the role and they're like, okay, I'm gonna be really good at this and I'm gonna focus on this. What do you think are those things that they mistakenly over-index on, and what do you think they should focus on instead?
So I'll answer it in sort of a few different ways. So the first thing I'm going to talk about is just time, right? So venture capital is interesting insofar as there's an ebb and flow to it, right? And so, like if you go to an investment bank, every week there's going to be 80, 90, 100 hours of work. You know, management consulting, same thing. You know, as an associate in a venture firm, some weeks it's on, some weeks it's not. And the on and off are driven by, you know, deals, it's driven by partner interest, it's driven by portfolio, et cetera. And the first thing I would say is, you know, when you're in the role, right? Like, can you hear me? Sorry. When you're in the role, right? First, congratulations, because it's really difficult to get. You're super talented. We all know there's a piece of luck to it. And so to maintain that role, bust your ass all the time. All of the time. Regardless of whether there's an ebb and flow to your actual work, always have a series of things that you can work on when the ebb is slow. Always. Now, why is that? Because venture capital compounds, right? So each year, you sort of stand on the work you did the last year. And so when you bust your ass one year, you're a little higher the next year, you're a little higher the next year. And what I've noticed is over time, that gap widens pretty significantly, pretty quickly. And so you constantly want to be busting your ass to ensure that you are able to sort of increase that gap. So then what do you work on? So as I mentioned, you know, when you start in venture, there are some things you're going to think are really important, others that you may not, right? And you don't know where to focus. Again, focus in on your partners, because it's an apprentice business. Like, this business is an apprentice business. So really try to understand your partners, understand what they need, and try to provide that, right? And then, you know, there's sort of different levels of doing that, right? That base level of just providing it, but then constantly be thinking about how you can over-deliver. And those things you're working on when things are slow are the things that you're doing to over-deliver for your partner. The more you do that, the more you're going to understand the way they work and the way this industry works. Very important nuance. You think all the partners in a firm act similarly. They do not. The way one partner works is completely different than the way another partner works. So you really want to understand, you know, the way each individual partner works and what you can do to serve them. The more you do that, the more you'll be able to build yourself within the partnership. And again, like, what we trade on is trust. So when you have trust from your partners, you're able to leverage that into doing other things. And so that's what I would do early on.
Yeah, no, I wish I could write this down up here, but I'll have to ask him for the notes later. Okay, so Ollen, we all know that networking and mentorship is really important in this business. Like Phil just mentioned, it's an apprentice business, and Ryan talked about it on the last panel. But there is a difference in the way that people approach that. What are some of the best ways to approach you when it comes to wanting to be your mentor, wanting to learn from you, especially with professionals not at your firm?
Yeah, that's an interesting one. Things get busy sometimes. I do think the best way to approach it is, I almost think about it like kind of think of going for deal flow. Often you want to get to a no fast, right? So if you wanted to approach me, hey, I'm this and this, like to talk to you. I think it's important to make sure that you're presenting something that makes me feel like I'm going to get value out of it. Don't ask to pick my brain. That sounds painful and gross, right? If you tell me, hey, do you have a half an hour so you can tell me everything about this, that doesn't really work for me. I think I can learn from everyone, and obviously maybe can share some things with other people, but I'm looking for interactions and engagement. For people who present themselves as just wanting to suck information out of me, like just my personality, that's not really appealing to me, right? And so I think it's a relationship business, it's an apprenticeship business, it's a give and take business, and not that we had this relationship, but I remember first meeting Nasir, and we sat and he talked, and he told me about what he wanted to accomplish, and got me excited about his dream. And so I'm always excited to talk to Nasir because it's exciting and to see him kind of grow and develop so fast. I think we had a conversation. The first conversation we had, you said I was thinking about launching a fund. That's when we met. And that's just exciting, right? To be part of someone's helping their dream come true. I love that, but just transactional exchanges of information tend to fall down my priority list.
For sure. And just piggybacking off of that, for all three of you, how can one best benefit from those mentorship relationships once they have them?
Yeah, I mean, I think it was mentioned on the last panel, like this is the long game, play long ball. This is a drip marketing campaign. This is, you see a news article like, hey, I just saw one of your portfolio companies announced a deal. That's awesome. Would love to grab quick coffee. I think, to Ollen's point, I think the general questions get general answers. And so the more that you can come in with a specific question about something, because the whole, I want to pick your brain, like that gets deprioritized and canceled, right? Like, but if it's like, hey, I saw your deal on X, it's a generative AI company, I got 2 others that I'm looking at, would love to pick your brain on those, that gets scheduled and, doesn't get moved. And so I think, the more specific you can get in your pitch, the more specific you can get in your email, those are the things that like the one line cold open, would love to connect and grab a coffee. Like those don't happen with the level of frequency and dedication, and like I'm not prepared to come into that. But if you want to talk about AI, you want to talk about vertical software, you want to talk about supply chain and logistics, you want to talk about climate, like let's talk about it. And in that, like in the mentorship piece, the trade is as we talk a little bit about work stuff, I want to start talking about the whole person. Like, how's everything going at your firm? How are they treating you? Like, are you seeing a good deal flow? Like, that trade ends up happening, but the offer is like, let me share something I know that you might not know, and then in return, the quid pro quo, can you give me a little bit of an industry insight or a fund insight? I mean, I've leveraged this with this guy dozens of times over my career, and he's been incredibly generous, but I felt like it was also like a little bit about deals and a little bit about work and a little bit about like, well, how do you do what you do? And the quid pro quo is like, stick it out, work your ass off. Like it's consistency. And so I really do think the more you can like focus on specifics and make it a learning exchange, where the quid pro quo for you, for the junior VC, is learning more about the business and learning more about the softer pieces of it. But like you're trading on the fact that I can't go to all the conferences. I got soccer and swimming and all this other stuff after school that I've got to deal with. If you're going to the conferences, give me that download. That's super helpful and super valuable content that I'm not able to get firsthand. So I just think trading on the things that you're able to have more specific knowledge about in exchange for the things that you're trying to learn in this apprenticeship business is the way to go.
So just like 100 on that, and just 2 things, and Mikkey and I talk about this. So what do I have, right? I have experience in relationships. I've been doing this 25 years. What does Mikkey have? She has time, right? I don't have time. I don't. I can't. I don't. We don't. Like, I just got back from New York. I'm constantly gone. I have no time, right? And so, like, Mikkey can, like, go deep on something that I can't, right? So as you think about the trade, what I often tell folks who are starting out in this business is go super, super deep in something narrow. Now, why? Because if you come to me saying that you know something, you need to know it better than I do, right? And I know it pretty damn well because I spend a lot of time on the markets that I spend time on. And so, like, you can't go too wide, right? You have to be sort of super narrow and super deep. And then even if I don't ask about it, if you're talking to it, I know you know what you're talking about. But if you go a little wide and you're not deep enough, that value trade that Dave is talking about, I'm not gonna feel it, right? So maybe I'll meet with you once, but we may not meet again because I don't have that value trade, right? So like, keep it narrow, go deep, and as Dave mentioned, like you go to these conferences, you go to these things, be able to download people on it, right? And quickly, right? So like something that would take 10 minutes to describe it in one, right? Because that's the kind of thing that's really, really valuable to us because we have so limited time.
And I don't want us to come off as though we're sitting at the top in the highest floor of the cathedral at the penthouse looking down on everybody. Like I can do a cap table, and I do cap tables, and sometimes I gotta crank out an investment memo. And I think there are no people more approachable than the folks on this panel, right? So it is not that we are like please don't feel patronized in this conversation, because this is really because we know the steps and we know the rungs and we know how hard and how high you gotta climb to get to a level just to get to equal ground, and then to continue to climb above that. So this is coming from a place of lived experience and love, and not from a place of I've climbed up and I'm not reaching back to try to lift anybody else up. We really do care about this, and so I didn't want that. Yeah, I don't want people to glaze and say that we don't know where we've lost touch, but this is real stuff, guys, and we are really. I think the reason for this type of event, the reason for Black VC, is to double the number of Black check writers, Black investors, Black venture capitalists in this country, and to do that, it's going to take all of us working together. So I really wanted to drop that a little bit, because I didn't want people to feel like we've gotten to this point and we're not looking to help anymore.
One other thing.
Yes, can I just comment on that real quick? Do you mind? Because I think this is a critically important point. So the reason that we're being as direct as we possibly can is because when I started in this business, all the Black VCs in the country would be at that table. That table. Literally, when I went to my first NVCA, there were 3 in a room of 5,000, right? And so for us, we cannot believe this. And what I'm trying to tell you is what I wish someone would have told me when I was sitting in that associate or VP or analyst shoes. And so we're trying to be as direct as we possibly can, because we want as many of you as possible to be partners. And so it is 150,000% from a point of view of love, and it's trying to be direct as possible. And if any of you know any of us, you can reach out and ask us directly, and we will sit down and chat with you about this stuff. But just having, for me, I almost cried when I walked in this room and saw everybody here. I cannot believe that we have a Black VC event in DC for a regional chapter of Black VC that has over 100 people sitting here. I literally cannot believe that. And so just having the opportunity to talk to you about what I think it takes to be successful in this market, I'm going to take it, and I'm going to be as direct as I possibly can. Sorry.
I'm just going to let those comments sink into the crowd. I don't want to information overload. I will cede my time to the conversation. I'll pick it up on the next question.
No, for sure, and I know that I appreciate it. That's why I was so excited to moderate this panel, because I know that you guys would keep it real, and you are, and I appreciate that. And this is my last question before I open it up to the floor for questions from you guys, because I don't want to be greedy. There's a lot of knowledge that you guys can get from the panelists. So it's almost well-timed, because it'll be a humbling question. But we started the panel by talking about a pivotal moment, positive. What about failures? Phil and I have talked about this a lot. You know that you screwed something up. What do you do next? And so I would love if all of you guys could share a moment where, something didn't go the way you planned or something went wrong, what you did after, and what all of us should learn from those mistakes.
Yeah, I'll start. Yeah, I have a ton. But when I think about failures, especially, and I'll do it from the context of kind of coming up through the ranks and learning, the first thing I became aware of that was really, really important is that the minute that you realize that you've made a mistake, tell someone. When you're up and coming, you don't realize that you're going to be making mistakes your entire life, and unfortunately, because your role gets bigger and bigger, they tend to be bigger and bigger mistakes as you go along. So your worst mistake hasn't yet happened, trust me. And so let someone know, because if you're with the right firm and if you're around the right people, they can help you, even when it doesn't seem like it. There are people, you're surrounded by people, particularly in this environment. And I tell you what, I'll give you a secret, but I don't want it to. Talk about to get in touch with me. If you say, hey, I'm doing such and I made a mistake, or I have a problem, or I need help, I actually, regardless of no time, I can't refuse that request to help out a fellow, underrepresented VC that is stuck with a problem. I wish I could not respond to that, but I just can't. So there's lots and lots of people out there to help you. And so for me, what I learned is make a mistake, own up to it. I tell people all the time, look, don't make me spend a bunch of time trying to figure out what happened. Just tell me, right? So we can get to solving the problem. I don't want to spend cycles. I'm not interested in shooting the messenger or any of the other nonsense. We got to fix the problems. I see Kimberly out there. I'm just a big problem to her constantly. She's my fund admin, was a fund attorney. So yeah, that's what I would say for me. Like my biggest mistakes were making a mistake, knowing it, not telling people right away, assuming that I could fix it, and it just gets more and more difficult. And eventually you get to the same place where I'm telling you to start to in the first place, which is like, tell somebody. It's not an embarrassment when you're up and coming to be over your head. It happens all. It's actually a good sign to some degree. So don't try to fix the problems that you run into by yourself.
And don't make it again.
Yes.
Mine is a little different. When I first started, I stayed 2 heads down. I was in the job, I was at my computer, I was doing the work, and things were happening around the firm. And I was like, oh, but if I just stay here in my office at my desk, focusing on my cap table and my funds flow and my investment memo and my Axios research, I'll be good. And the reality is, especially for women and people of color, for black people, the ability to walk around and know what's happening in the fund, know what's happening around the firm, know people, have relationships, know the other folks in and around the space. Depending on, we've got a mid-sized firm, and just being able to have relationships, those relationships are built with time, and they're not built based exclusively on the quality and comprehensiveness of your work product. They're built on relationships that you've got with, the people who help you in fund support management, the people who work in communications. That you want to be known as a person and not just as a work product. And I think, to me, one of the biggest mistakes was not earlier in my career lifting my head up and walking around and learning, hey, what's a good restaurant to go to? Just starting those types of networking within your own organization, so that you know people and you know things about people and there are connections to people, so that when deals come up or opportunities come up, or I want you to join this call, you're top of mind, and not sort of somebody who is sitting in a cubicle somewhere just cranking away. So I think the mistake is that the default of doing hard work with your head down is enough to keep you there. And the reality is, you gotta make sure, you gotta know what's happening outside of just the 4 corners of your job, 4 corners of your role. And that means spending time, investing time in building relationships like these, but also with the folks that you work with. Know the receptionists. Do you know how much power the receptionists have in organizations? Do you know how much power, I use this in diligence, actually. When I would go to a company when I was doing growth deals, and you ask the receptionist, what does the company do? And if he or she couldn't answer, that means that they don't, that's a bad fact for how culturally relevant the folks are. So really, play a little bit of politics, because that's what's going to keep you aware, keep you there, keep you abreast of the newest opportunities. You will understand what's happening at the fund level, at the firm level, so that you can just be ready to react, as opposed to, somebody having to knock on your door or send you an email to inform you of what's going on. By the time that happens, it's too late.
Yeah, so agree with everything that's been said. So for me, first, I mean, like, venture is a career where you're going to make mistakes all the time. It's just like being a founder, right? Like, you're constantly going to try things that don't work. You have to sort of test and learn as quickly as you can and iterate. So, like, you have to first be comfortable making mistakes, because if you are, that'll allow you to take the right amount of risk. Another thing, just at a high level about mistakes, when you think about a decision, right, it's important to know whether the decision actually was a mistake or it just didn't go right? You can make an investment that was a good investment and it completely loses all your money, and you can make another one that makes money, but the decision-making process for the first one was correct and it was the right deal, and on the second one you got lucky. And you sort of need to know the difference between those, right? And so really being able to understand, like, what is truly a mistake and what's not. So, but getting to answer your question, two specific things I think about in terms of mistakes, and again, of a 50,000 or 100,000 that I've made. But when I started in the business, I mean, I thought I needed to do deals, right? So, like, I get into the fund, I wanted to generate deal flow, I wanted to do deals, and, like, that's basically what I focused on when I started. And as I said, it's an apprentice business. You want to spend time with your partners, learn from them. And so I was stepping over diamonds trying to run after these deals, and I shouldn't have done that, right? So that's definitely one. Another, like, super difficult one for me was the deal, I had made a number of investments, and I had one that was being bought, right? So this was my first exit, quote unquote. And let's say, I had put, 5-8 million, I was gonna get 40, something like a decent return, but not great. And so, but it was the first one, you know what I mean? So I was really excited about it, and the company was doing diligence and, going back and forth. We could tell the company was slowing down. And 2 days before signature, so not 2 days before term sheet, 2 days before signature, they come back to us and they say, instead of paying like 240, we're gonna pay 90. And I was like, the fuck, like, this is crazy. The mistake was I should have taken it. So we all, like, fuck, we're not gonna take this. We knew the business was slowing down. A year later, we sold it for 30. Right? So again, the mistake was, being rational, looking at the deal, looking at the revenue, understanding what's going on and making the right decision, as opposed to being frustrated by the change in price.
Best time to exit is always yesterday.
Right.
Always yesterday.
Yeah, wow. I can't wait to hear about that one. I haven't heard about that one before. But all right. We don't have a ton of time, but if there's anyone that has questions, would love to open it up to the floor. No? Yes? Yes. We've got a mic over there and a mic here.
Hi. Learned so much already. But I'm on the other side. I'm a founder. My name's Corey White. I'm CEO of a cybersecurity company. In cybersecurity, when I go to cybersecurity conferences or with the other founders, I'm always the only one in the room. What advice can you give to a founder of a cybersecurity company to really continue breaking through? And I want to bring more people with me, but I can't even find them. But I'd love to hear what you see on your side when deals come to your table in tech or cybersecurity.
You're asking what do we?
What advice would you give to a founder in tech?
Own the room, man. Like, I mean, if you're the only one in the room, everybody should know your name by the end of the event, or as many people as possible. I mean, I think one of the things that founders tend to, in my opinion, founders tend to be a lot more shy about their idea because they worry about competitive pressure, competitive dynamics, and an out-executing founder will always beat a super strategic founder, or a founder with the best idea will always lose against a founder who's just out there selling and pitching and trying to hustle. But I think for you, look, I think that yes, there are not a lot of people of color, black people in cyber, in tech, in business, and so I think that the more that you can start to find community and build off of that community, I think you can grow. But I think more importantly, like own your map, own your area, and let people know who you are in this area, and continue to talk about your business and talk about what you do, and like gather that feedback, synthesize that feedback, and build off of that feedback.
And I would say, like, very specific to you, Maurice, Data Tribe, cybersecurity. I would write him that compelling note and ask him to give you feedback on his pitch, and let him tell you what he sees, what he thinks your issues are with getting past the barrier. And then listen to what they say. And very often, that's something that, particularly for founders, send me your deck. I can very quickly go through that and say, look, this is where I think you're going to have hurdles, X, Y, and Z. And I think what you'll find is that if you take that advice to heart, it may unlock some of these challenges that may be positive barriers. There's some of them that are more subjective, that it's not going to unlock, but you got to work on the ones that you can work on, right? And the other ones we work on in rooms like this.
Okay, thank you.
Thank you so much.
I had a quick question. Phil, you were talking earlier that success is in the nuances, right, when you're looking at companies. For each of you, what is your one question that you like to ask founders or companies that becomes their tell, like confirms your gut instinct about them? Or alternatively, if that's too hard to answer, what's a red flag?
Yeah, sure. It's a great question. So I'd say a couple of questions I ask. I'll use two so I don't take too much time. But one question I always ask folks is, so you're the founder of the company. Who are the first 2 or 3 people you would hire and why? And often what that tells you about the person is, first, what gaps do they see in themselves that they feel like they need to sort of fill? It also helps you to understand what they see as being most important in terms of the early stages of the business. And then a follow-up question I always ask is, tell me the first 2 or 3 people you'll hire, because that often tells you something about the folks that they know that would follow them, like understanding sort of, it's really, really difficult to start a company and hire your first few employees, right? Because like, who's gonna take this leap with you? And when you're able to attract really, really high quality talent, it says a lot about you.
Yeah, mine is, how did you retain X, Y, Z? Or how did you meet your co-founder? Like understanding the origin stories. Like, what is your connection to this problem? We invested in a founder who was doing a climate tech company, and he was like, our house is always at 75 degrees, but my daughter's room is always at 68, and she wasn't sleeping, right? And so that was his connection to the problem, and that was such a unique and interesting connection to the problem. The other question I ask a lot is, how do you win? Like, what does victory look like? One of the challenges that I coach our team on often is that we can't have more ambition about the company or the business than the founder. And if the founder, to me, smoking that out is the difference between, a 3X and an 8X, right? Because sometimes founders are like, and I think this is perfectly legitimate. I want to build this, and there's a bunch of people that'll buy this in 2 years, and it'll be a great exit for me. Might not necessarily be a great exit for the investors. And so understanding how big and audacious they want to build a company, who are some of the lookalike companies that they admire, because that just helps to scope how big they think this opportunity can be and how committed they are to getting it to that next level.
So we invested in like Series A companies for the most part, so just slightly a little bit larger. And I would say one of my favorite questions that we asked every founder at some point was simply, what are your views on diversity and inclusion? And then just sit back and get some popcorn and listen to the answers to that uncomfortable question. It doesn't really have an answer. There's not like a right or wrong answer other than some obvious wrong answers. One of my best friends is black. That's a bad answer. Or, I don't think it's important. That's not a good answer. But other than those two, it's really a question about thought processes. It's to your point, David, it's a little bit about, have you lifted your head up to see what's going on and around in the world? Have you thought about how you're pitching me with this product that is going to be marketed to people of color? But have you thought about the idea that maybe, just maybe, it might be a good idea to have some diversity on your own team if that's the audience that you're going to be selling to? So it's an open-ended question that gives me a lot of insight about how people process problems. And very few people have a good answer. I don't even have a good answer, you know. I know where I feel on it, but we're all working to solve that challenge. So I enjoy it.
Yeah, that makes a lot of sense. Unfortunately, our time is up. This blew by. But gentlemen, thank you so much for participating in our panel. Give them a round of applause. Really appreciate it. And thank you so much. We'll welcome Haley up to the stage for our next panel.